Hey guys, Akil Stokes here. Want to pop in for a quick second and just share with you some live room footage from today's New York live trading room. We had a pretty cool discussion to start off our day. I believe it was on the euro dollar. Jason Greystone popped his head in and we had a nice discussion about the head and shoulders pattern, which is something that he's been doing some very detailed testing on for over the past year now. So I just want to share with you a little bit of the discussion that we had in the live room. And if you like that sort of community, if you like that type of atmosphere, not just trading, hopefully you don't come in just to take trading calls, but if you like just spending 3 hours a day with like-minded individuals, somebody, or I guess some people that you can share ideas with and they actually know what you're talking about, make sure you check out our free 1-week trial. We have one for the London room. We have one for the New York room. So if you're brave, you can actually take a free 1-week trial in both and that'll give you 2 weeks. See how I did the math? 1 + 1 is 2, right? So check out this footage. Hopefully you enjoy it. Again, it's a discussion from this morning's live trading room session. And good luck to this week, guys. Ooh, that was bad. Ooh, good luck to this week. Let's hold on. And good luck. Nope, that's bad too. Good luck trading this week, gang. There we go. Let's hit the footage. Yeah, probably not. Now, Rob says, is this a head and shoulders? Yeah, this could be a head and shoulders, Rob. Yep. You got your head up here. You got your left shoulder right there. Let's delete some of the drawing I had on here. You got your right shoulder right over here. Yep. And you've got essentially your neckline right here. Technically, it's going to be a little bit of a slanted neckline because of these wicks down there. But you got your neckline right there, yeah. So that can definitely be a head and shoulders pattern. Going like this, neck, and you're forming the right shoulder right now. Now the question is, how do you trade the head and shoulder patterns? Are you a head and shoulders person, Rob? Some good coffee. That is some good Black Rifle coffee. America. With your head and shoulders, do you trade right shoulder or break of the neckline? Yeah, certainly be a potential head and shoulders as well setting up for you guys that trade right shoulder. You can look for some type of entry reason right here at the right shoulder. For you guys that trade break at the neckline, it's going to depend on how you're measuring your neckline. The technical lows are right here. So you can either wait for a break and close below these lows, right? And either trade it like a breakout, buy or sell, stop it on the way down, or wait for the breakout, retest, and get short that way. Or if you're using a trend line, you can connect the lows of your necks and use a trend line break strategy. Same thing, either sell stop on the way down aggressively or break and retest. Greystone says, anyone testing head and shoulder patterns? And Greystone's been testing these for a while now. He said, may I suggest something for you to test? And the answer is yes, of course you could suggest it. In fact, you should require it. Test aggressive entry at the test of the neckline once broken below and retest it. Stops ATR above entry. Test aggressive neckline. Test aggressive entry at test of neckline. Gotcha. So after the break and close, the retest of the neckline, Greystone? Here we go. So Greystone is saying this, and this is how I would personally trade it as well. And again, depends on, you're going to have to decide on whether you're drawing slanted necklines or you're just looking at the lows, what type of head and shoulders pattern trader you are, right? But you're looking at a break of the neckline. Let's just call it right here for now to make this example simple. You're waiting for the break of the neckline. You're waiting for the retest. You want to get aggressive at the retest. And instead of placing targets up here, because obviously you're going to need a lot of expansion down if you want to get a risk reward there, just check it out, right? You want to get a risk reward here, that's going to be your, I'll make this red. I I never find red on here. I wish I knew my alphabet. If you're looking at stops being above the shoulder, which would be your next structure level, you're going to have to look for an extension just to get a one-to-one entry. Just to get a one-to-one entry. I repeat, just to get a one-to-one entry, you're going to have to look for an extension of equal length. So what Jason Greystone is suggesting, right, and of course you got to test it yourself, instead of putting stops up here, you put aggressive stops right above your entry point. And again, that entry point is going to depend on how you're trading it. Lower low, lower close, you get it above that candle. Double top, you get it above that candle. I would lean towards trading it that way as well. Again, like Greystone said, make sure you test it. I would lean towards trading it that way as well. There's a cool saying in trading, and I'm seeing it more and more as I get more experience. Understand, guys, I've been doing this for, I guess, 10 years now. Man, I'm old. But I've been trading for 10 years. Not successfully all of the 10 years. I've been trading successfully for, what year is this? 2017? Successfully for about 6 years now. And for you guys that have been with me for a while, you know that I've been, I guess we should ask this. Who's the longest person that's been with me in this room? Type in how many years that you've been following me. I always suggest starting off very conservative, right? A lot of traders come to me, they come to us for help because something is not going the way they expected in their trading. Would you guys agree? You guys reach out for help, you take training courses, you spend time in a live room because something isn't working, right? I think it would be buffoonery to take a course when everything is working, unless you're just, you're just looking to do continued education. But most people come to us because something isn't working. And what we try to do here is we try to restart your trading. And I always suggest that you'd be as conservative as possible, right? Charles is putting sell limits on euro dollar. He's probably looking 26.18 up here. So we're going to be going head to head with Charles. But I always suggest being as conservative as possible, mainly because it stops you from making those aggressive traders mistakes. A lot of traders struggle because they come into the markets, they see everything, they want to take everything, they have no filters, they're over trading, they're trading too much. So I suggest being very, very conservative. At the point where you're not as good at reading a price chart, you want to be very safe with what trades you take. Does that make sense? When you're not as good at breaking down the markets, you really want to make sure you take the safer trades. Now, as you evolve as a trader, you get more aggressive and more aggressive, right? And the reason you get more aggressive is because you become better at reading a price chart. You become better at your craft, so you're better at identifying opportunities that work and better at identifying opportunities that don't work, and that allows you to be a little bit more aggressive because you're just better at what you're doing. Does that make sense? Think about it like a rookie sports player where the coach is like, hey, rookie, you just go in there. Your job is don't mess up. When you get the ball, you pass it to the star player. That's your job as a rookie, right? And then as you get better, right, the coach gives you a little bit more freedom. Like, you can run whatever play you want. You have the freedom to roam, right? Same thing with trading. But I always suggest that you take a more and more aggressive approach. And you'll begin to notice as you spend time in the markets that it's kind of like the real estate. I don't know how many guys are in real estate, but good deals don't last. That's the saying in real estate. If it's a good deal, and I guess in anything, good deals don't last. And the same thing is with trading. Good trades don't last. If it's a very good trade, you'll notice the market reverses right away. Have you guys ever noticed that? Good trades, the market doesn't kind of wait for everyone to get involved. It's not like, okay, let's hang out for here. Let's get all these rookie trades. No, it goes right away, right? And when you become better at identifying those situations, it allows you to reduce your risk, because when you can identify those good trades that reverse right away, and going back to our head and shoulders example, Jason Greystone talked about putting a stop here above your reversal, or above your entry, I should say, instead of above the shoulder, because you know what he's predicting? Do you know what he's predicting here? He's predicting that this is going to be a good move and that we're not going to see this level tested again. We're going to test it once and come straight down. Am I right, Greystone? We're not going to play around up here. So it's a very aggressive stop loss. But the reason is because he's looking for this as being a very good trade. Now, on the flip side of it, you look at a risk reward like this, and I don't, we'll just use this as an example of where you're shooting for compared to the other one. How many times does he have to be right? What's this, 3 to 1? 2.5 to 1 right here?